Most people think millionaires are created by one big lucky break, one massive investment, or one extraordinary talent, and that belief alone keeps them poor for life. The reality is far more boring and far more powerful. Millionaires are built through thousands of small financial decisions made consistently over decades. Decisions so small that most people ignore them, dismiss them, or laugh at them. What time do you wake up? How quickly do you pay yourself first? Do you reinvest profits or upgrade your lifestyle? Do you buy convenience or build systems? Millionaires understand that money compounds not just in markets, but in behavior. Every small decision either strengthens or weakens the financial engine. Skipping one unnecessary expense doesn't make you rich. Repeating that discipline every day for 20 years does. That's why wealth looks sudden from the outside but feels inevitable from the inside by the time someone notices. The system is already complete. Small financial decisions matter because they shape habits, and habits shape outcomes. Millionaires don't debate whether to save, invest, or track expenses. It's automatic. They remove emotion from money early. They automate investing. They separate lifestyle money from growth capital. They don't wait for motivation. They design structure. A person who invests $500 a month consistently will outperform someone who waits years hoping to invest $50,000 someday. Millionaires respect time more than scale. They know that consistency beats intensity every single time. This is why they obsess over small percentages, small fees, small inefficiencies. A 1% improvement repeated for decades becomes enormous. A 1% leak repeated daily becomes catastrophic. The poor ignore small leaks. The wealthy hunt them. Look closely and you'll see that millionaires are extremely intentional about everyday spending. They don't ask, is this expensive? They ask, does this move me forward or backward? That question governs everything. From subscriptions to cars to housing to food to entertainment, they understand opportunity cost intuitively. Every dollar spent today is a dollar that cannot compound tomorrow. That doesn't mean they never enjoy life. It means enjoyment is scheduled after progress, not instead of it. They delay gratification without resentment because they understand the math. Compounding rewards patience brutally and punishes impulsiveness relentlessly. Small financial discipline today buys massive financial freedom later. This is also why millionaires rarely feel financial stress once the system is in place. Stress comes from fragility, not effort. Small decisions reduce fragility. Emergency funds, low fixed costs, multiple income streams, conservative assumptions. These aren't dramatic moves, but they create resilience. When markets dip, millionaires don't panic. When income slows, they don't collapse. When opportunities appear, they have cash and clarity. All of that comes from years of choosing boring discipline over exciting consumption. While others chase shortcuts, millionaires stack bricks, slowly, quietly, relentlessly. If you want to understand how millionaires are really made, stop studying their biggest wins and start studying their smallest rules. What they refuse to do matters more than what they do occasionally. Wealth is not created in moments of brilliance, it's created in moments of restraint. And once you grasp that, you stop looking for miracles and start building machines. That's how small financial decisions create millionaires. What separates small financial decisions that create millionaires from the ones that destroy people? Financially is awareness of direction. Millionaires constantly ask themselves a simple but brutal question. Is this decision pushing my financial life forward by even 1 inch or pulling it backward? Most people underestimate how powerful direction is over time. A daily coffee doesn't ruin anyone. A slightly cheaper phone doesn't make anyone rich. But a lifetime of decisions made without direction guarantees mediocrity. Millionaires design default behaviors that move money toward growth automatically. They don't rely on willpower, they rely on systems. Every paycheck is split the same way. Every bonus is treated the same way. Every unexpected dollar is assigned a job immediately. There is no confusion. Confusion is expensive. Clarity compounds. That's why wealthy individuals can make thousands of decisions quickly without stress, because the framework is already built. Small decisions stop being emotional and start being mechanical, and once money becomes mechanical, it scales. Another place where small decisions quietly create millionaires is lifestyle calibration. Millionaires are extremely careful about what they normalize. Once a cost becomes normal, it becomes permanent. That's dangerous. So they resist early upgrades aggressively. They don't rush into luxury apartments, luxury cars, or luxury routines the moment income rises. They wait, they test, they observe cash flow under pressure. They let investments mature before lifestyle expands. This delay creates a widening gap between income and expenses, and that gap is where wealth is born. Most people close that gap immediately with consumption. Millionaires protect it like oxygen. They understand that lifestyle inflation is silent but lethal. It doesn't feel reckless, it feels deserved. And that's why it's so dangerous. Small decisions to not upgrade again and again are what quietly separate people who escape financial gravity from those who stay trapped forever. Small financial discipline also shows up in how millionaires think about risk. They don't chase returns blindly, they don't gamble, they don't swing for the fences with money they can't afford to lose. Instead, they stack probabilities. They diversify early. They accept slower growth in exchange for survival. Because survival allows compounding to do its job. A person who avoids catastrophic loss automatically beats most investors over long periods. Millionaires make small decisions that reduce downside risk every day, keeping cash buffers, avoiding unnecessary debt, reading contracts carefully, saying no to deals they don't fully understand. None of this is exciting, none of it goes viral, but it works. Wealth grows fastest when nothing goes wrong for a very long time. There's also a psychological side to small financial decisions that most people miss. Millionaires train themselves to tolerate boredom. Repetition doesn't scare them. Routine doesn't feel like a prison, it feels like freedom. They invest the same way month after month. They review numbers regularly. They track performance calmly. Emotional swings are minimized. This emotional stability comes directly from small disciplined actions repeated over years. While others ride highs and lows, millionaires remain steady. That steadiness protects capital, and protected capital compounds faster than emotional capital ever could. This is why millionaire behavior looks most dull from the outside. But dullness is deceptive. Underneath, an unstoppable financial engine is running quietly. Ultimately, small financial decisions create millionaires because they change identity. Over time, disciplined behavior reshapes how a person sees money, risk, and self-worth. Spending becomes intentional. Investing becomes non-negotiable. Patience becomes natural. At that point, wealth is no longer something you chase, it's something you expect. And once expectations change, behavior follows automatically. That's the real power of small decisions. They don't just grow money, they reprogram the person making them. And once that happens, becoming a millionaire is no longer a goal, it's an outcome. At an even deeper level, small financial decisions create millionaires because they compound asymmetrically. The upside keeps growing while the downside stays controlled. Millionaires understand this intuitively. They structure daily choices so that losses are capped and gains remain open-ended. That's why they obsess over things most people find insignificant: fees, interest rates, contract terms, payment timing, and margin of safety. A 0.5% saved on fees repeated across decades quietly becomes hundreds of thousands or millions of dollars. Choosing a slightly cheaper but reliable supplier early in business can mean the difference between surviving a downturn or collapsing under pressure. Refinancing debt at the right moment, even if the savings look small monthly, can free up massive capital over time. These aren't dramatic moves, no one applauds them, but millionaires know that wealth is rarely created by brilliance, it's created by avoiding stupidity, consistently. Small decisions protect capital first, and protected capital has time to grow into something extraordinary. This mindset also explains why millionaires are brutally selective about debt. They don't fear it, but they respect it. A small decision to use debt for consumption instead of production can quietly destroy decades of effort. Conversely, a small decision to use debt strategically, to acquire cash-flowing assets, to scale a profitable business, or to optimize taxes, can accelerate wealth dramatically. Millionaires distinguish between debt that enslaves and debt that serves. They read the fine print. They understand interest compounding works against you just as powerfully as it works for you. That's why they are conservative early and aggressive later. Early mistakes with debt are unforgiving. Late-stage leverage applied to stable assets with predictable cash flow can be transformative. The timing of these decisions matters more than the size. Small choices made at the wrong time destroy wealth. Small choices made at the right time create it. Another area where small decisions quietly shape millionaires is time allocation. How you spend your time determines how you spend your money. Millionaires protect high-quality time fiercely. They say no early, they decline distractions, they limit low-return activities. A small decision to spend 1 extra hour a day learning, building, or improving compounds faster than any stock investment ever could. Over years, that hour becomes expertise. Expertise becomes leverage. Leverage becomes income. Income becomes investment capital. And investment capital becomes freedom. This chain is invisible to most people because it doesn't produce instant rewards. But millionaires understand delayed returns better than anyone. They're willing to look wrong, boring, or slow today because they're optimizing for dominance tomorrow. Small financial decisions also determine how people behave under pressure, and pressure reveals everything. Millionaires rehearse discipline before it's required. They practice restraint when money is tight, so it becomes automatic when money is abundant. This is why sudden wealth often destroys people who never built discipline early. They have no internal governor. Millionaires do. Their systems don't change just because numbers get bigger. Savings rates stay intact. Investment rules remain consistent. Risk limits are respected. This stability is why wealth, once built, tends to stay built. It's not luck, it's conditioning. Small disciplined actions repeated for years rewire behavior so deeply that even large sums of money don't disrupt judgment. What most people fail to realize is that luxury outcomes, penthouse, apartments, high-end cars, private travel, elite lifestyles, are simply the byproducts of these small decisions, not the cause. Millionaires don't chase luxury, luxury eventually chases them. By the time they upgrade their lifestyle, the decision is boring. The math already works, the cash flow already supports it, the downside is already neutralized. That's why their luxury feels effortless while others feel stressed trying to imitate it. The visible result hides the invisible discipline underneath. Every impressive outcome is supported by thousands of quiet choices no one ever saw. And this leads to the most important truth of all: small financial decisions create millionaires because they create identity. Over time, a person stops asking, should I save or should I invest? The answer is automatic, it's who they are. At that point, wealth creation stops being a struggle and becomes a default setting. The person no longer needs motivation, inspiration, or external pressure. The system runs itself. That's when compounding becomes unstoppable, not just financially, but psychologically. Once identity and behavior align, becoming a millionaire is no longer impressive, it's inevitable. Finally, if you truly want to understand why small financial decisions matter more than any flashy investment, let me make it crystal clear. Every millionaire you see didn't become wealthy because they took one giant leap. They became wealthy because they repeated hundreds, thousands, tens of thousands of small, intelligent choices consistently over years, decades even. The compounding effect isn't just in money, it's in mindset, it's in discipline, it's in confidence. They automate investing, they track every expense, they question every purchase, they avoid the traps that enslave most people, and they allow time to do the heavy lifting. That's why they can afford luxury apartments overlooking Manhattan, private jets that cut travel time in half, exotic cars that are parked, not flaunted, and vacation homes that pay for themselves through rental income. All of that lifestyle is not a gamble. It is carefully engineered. Every dollar spent is analyzed through lenses of opportunity cost, tax efficiency, and long-term value. Luxury, comfort, and prestige follow naturally once the system is in place. It's not random, it's intentional. And this intentionality starts with decisions most people consider too small to matter: skipping unnecessary subscriptions, cooking at home instead of ordering out, negotiating a better deal on services, investing a few $100s monthly, delaying a luxury purchase until the numbers make sense, and consistently reinvesting returns instead of consuming them. What people often miss is that small decisions accumulate invisibly, silently changing the trajectory of your life. Millionaires think decades ahead. They don't just ask, can I afford his today? They ask, will this strengthen my financial engine, increase my optionality, and preserve my freedom in 20, 30, 50 years? Every small decision compounds, and because they are intentional, compounding works for them instead of against them. That is why a small decision repeated daily, like saving 10% of income, automating investments, or carefully tracking spending, can eventually lead to ownership of businesses, diversified portfolios, income-generating real estate, and passive cash flow that funds luxury without stress. This is the invisible scaffolding behind every penthouse, every supercar, every private flight, every yacht anchored offshore. Those visible luxuries are just symptoms of invisible discipline. Without the small choices, none of it would exist. With them, everything becomes inevitable. Millionaires also understand that wealth isn't just for comfort, it's for freedom, influence, and legacy. Every small decision protects optionality and reduces exposure to catastrophic financial loss. They make choices to safeguard lifestyle against downturns, recessions, and inflation. They minimize fixed costs while maximizing income streams. They invest in assets that produce cash flow. They avoid liabilities disguised as assets. They protect wealth across generations. And because of these cumulative, seemingly minor decisions, they don't just survive financial crises, they thrive in them. While others panic, sell, or over-leverage, millionaires remain steady, disciplined, and opportunistic. Their wealth is resilient, not fragile, and resilience is built in small increments, repeated without fail. So here's the takeaway. If you want to think and act like a millionaire, start obsessing over the small decisions. Stop worrying about one big investment, one miraculous opportunity, or one instant show. Focus instead on the daily choices that compound quietly, controlling spending, investing early, automating savings, avoiding unnecessary liabilities, educating yourself, and protecting flexibility. Every coffee you don't buy, every unused subscription you cancel, every dollar you redirect into an investment, every decision delayed for the sake of efficiency, it all adds up. That's how wealth is quietly engineered. That's how millionaires are truly made. And once you internalize that principle, you realize that luxury, freedom, and influence are no longer aspirations. They are inevitable outcomes of your consistent, disciplined, small financial decisions.